Tragic weekend weakens USD. It's almost inconceivable with today's sophisticated surveillance techniques that a gunman could crawl across a rooftop in plain sight and take shots at a presidential candidate. However, that happened over the weekend in Pennsylvania, wounding Donald Trump, killing an innocent attendee, and seriously wounding 2 others. The impact on the families involved must be traumatic. Our hearts go out to them. The impact on the financial markets is that it has unnerved investors, but that hasn't been reflected in the value of USD. The GBP USD rate was testing but not breaking above USD 1.30 on Friday. This pair is a tad lower this morning at 1.2970. Euro USD pushed a little above 1.09 on Friday, but is just below that level today. It's worthy of a note that there's a lot of chatter that the bond markets are pricing in a Trump presidency. Slowing Chinese GDP weakens Australasian dollars. Chinese economy growth slowed to an annualized 4.7% in Q2, down from 5.3% in Q1. Retail sales were also slower at 2% on the year, compared to 3.7% in the year to May. That had an impact on China's suppliers. We saw the GBP AUD rate rise above AUD 1.9150 and the GBP NZD rate spike to NZD 2.13 interbank rate for the first time since September 2023. Although Canada earns less from exports to China, it's still hugely influenced by the commodity prices. That has caused the GBP CAD rate to hit the highest levels we have seen since March 2021. This pair is up at CAD 1.77 in this morning's interbank market. Other influences on these currencies in the week ahead include the Canadian, UK and NZ consumer price indices. We will also see employment data from the UK and Australia. It's going to be a little busy. GBP Euro highest for 2 years. In this morning's interbank market, the pound is trading at 1.1905 against the euro. This is a continuation of an upward trend that began when the pound changed direction in January 2023. It brings this exchange rate to the highest levels we have seen since July 2022, making the euro very affordable, but making life difficult for those who need to purchase sterling. Things that will influence inflation figures, and although the European Central Bank is unlikely to cut their base, and that ought to further weaken the euro.